expecting this to really panic the world. It had a funny way of showing it. Initially, as I said, oil prices did rocket up, but finishing the day up about 59 cents at a barrel of crude. Now, a lot of this has to do with the fact that the world is a different place than it was back in the 70s and even the 80s when OPEC carried such considerable global clout, and we, as oil producers, were nowhere to be found. Now, we are pretty much self-reliant in that arena, and as market watcher Alan Nuckman can tell you, that explains the very different reaction. What do you mean?
Yeah, you're seeing what could be a delayed reaction. It's not a knee-jerk that we'd get years ago when we'd see a $5 or $10 move in crude oil on geopolitical concerns. So I think we're seeing somewhat of a delayed reaction, but we're always on razor's edge, and there's price pop potential with the a bullish catalyst on any miscalculation at any time. It was interesting that last week we had crude oil actually down $5, so it got my attention more what the market didn't do than what it did, and I think the market's right now focused on the macro market and the fact that stocks made new highs and oil hasn't been able to keep pace here recently. Still makes me bullish, but it may be a delayed reaction like we saw in gold. Now, remember, gold didn't do anything for years of uncertainty until it did. When it should have been moving higher, it didn't.
You know what's kind of interesting, too? I guess with oil, much of it is based on the view if you think the economy is doing well globally, then oil's going to move higher. If you don't think that's the case, it will go down. And I'm wondering if that's playing in here. Without that, we might have seen a more, jerky reaction to the upside.
Yeah, I think that was the news from last week. I think it was the GDP numbers that we got out of China that were, weak, but they were still 6% or over 6%. So their growth is double ours, but the concerns remain. But the good news is, I think at any time a trade deal could be, a win could be claimed, and then we can look forward. So,
but what if China keeps trying to get oil?
Slowdown.
I'm sorry, my friend, but if China keeps trying to get oil from Iran, as we're told it is, and it might be stockpiling that oil, it's not listening to our threats to not deal with Iran, and that could complicate a trade deal. I don't want to get too in the weeds here, but do you think that this has reverberations way beyond what's happening in the Strait of Hormuz?
Oh, definitely. China is a big commodities consumer, and they may not go through the right routes to get the commodities that they want and the commodities they absolutely need. So, that makes things difficult on the global stage. But that's the beauty of these markets. The markets take all the buyers and all the sellers' opinions, and they distill it into one thing, the price. So we're stuck right now around 55 as a base. Now, 55 was a breakout area, if you remember back in June when we were trading sideways and making a bottom. So I think we want to watch this as a support level, but I would still remain bullish. And maybe not as much the commodity, because the commodity is more of a binary choice. But if you look at some of the energy stocks, look at Exxon, that's got a nice price pattern, and it's a good deal off its highs. And something else like Marathon Petroleum as refiner trading between 50 and 60 right at that midpoint of that action. So there are opportunities in the energy sector because it hasn't come back as the rest of the market has.
All right. We'll watch closely. Alan Nuckman, and to your point, and by extension here, no reaction in the gasoline markets. The people who trade gas futures as well, they're not too shaken up by this, but we'll keep an eye on it for you. In the meantime, keeping an eye on things happening south of the border here, or right at the border, Chuck Schumer and Donald Trump scheduling to meet together and soon over the border. Yeah, for real. Next.